Hey everyone, and welcome back. Today we're diving deep into building profitable trading systems.
Sounds exciting.
It is. We're going to be looking at the ebook Building Profitable Trading Systems from EasyLanguage Mastery.
Cool.
So it's kind of like peeking behind the curtain to see how the pros design their systems.
You know, it's funny. A lot of people think trading systems are all about intuition and luck.
Right.
But actually, there's like a systematic approach, almost scientific, you can use to build a system that actually has the potential to, make money in the markets.
And that's what's so cool about this stuff, right? Like cracking a code.
Absolutely.
So what's our mission for this deep dive? What do we want our listeners to walk away with?
Well, I think the goal is to give everyone listening the knowledge and tools so they can understand how to develop these systems.
Okay.
The ebook lays out this framework called the ELM Strategy Development Protocol.
Okay.
It's like a roadmap for building these robust trading systems.
Okay, a roadmap.
Yeah, step by step.
Yeah.
All right, I like that. I get lost without a GPS.
Sure.
So tell me more about this protocol. What makes it so special?
Well, it's kind of based on the scientific method.
Okay.
Which emphasizes that systematic and rigorous approach. So just like a scientist conducting experiments,
I see.
we're going to be testing our ideas and refining them based on the data.
Oh, okay, cool.
And speaking of data, note-taking is super important in this whole process.
Gotcha. So like those scientists and their lab notebooks in the movies with scribbled formulas and diagrams?
Exactly.
Okay, so that's where system development notes come in, right? Is that like a trading journal?
It is, but it's like a supercharged trading journal.
Okay.
You're documenting everything, your key ideas, your results from testing, observations, just every single step of your system development.
Oh, okay. So it's not just like...
Yeah, about keeping track of your progress.
But
it helps you avoid repeating the same mistakes, so you're not doing the same thing over and over.
Yeah.
That doesn't work.
That makes sense.
Yeah.
I can only imagine that feeling of like satisfaction too, like having a binder full of your own like trading system research.
Right. It's cool.
That's really neat. So let's say I'm ready to dive in. Where does a trading system even begin? Do I just like pick some random indicator and hope for the best?
Not quite. It all starts with an observation, something that you notice about the market that you think might give you some kind of edge.
Okay.
We call that your key idea.
Ah, okay. So like a light bulb moment.
Yeah.
So for example, I've noticed sometimes when a stock makes a new high, but then it closes below the previous day's close, it often seems to be like a reversal.
Yeah.
Is that a key idea?
That's a great example. That's actually a pretty well-known candlestick pattern called a key reversal bar.
Okay.
What's great about that is that you can translate that into a rule.
Yeah.
Like sell short when you see a key reversal bar at a resistance level.
Okay, cool. So I've got my key idea. This is my potential edge. I'm feeling pretty clever. What do I do next?
Well, before you just jump into backtesting, you got to define your development environment.
Okay.
This is like setting the stage for your system.
All right.
What market are you going to focus on?
Right.
What time frame will you trade? How much capital are you assuming you're working with?
Okay.
And also, super important, how are you going to factor in trading costs, like commissions and slippage?
Oh, yeah, those pesky costs. I remember reading in the ebook about a trader who completely forgot about slippage and commissions when they were backtesting. Thought they had this amazing system.
Oh, yeah.
And then they went live and were losing money on every trade.
Yeah, it happens.
Yeah. Oh,
It's important to be realistic about that stuff.
Yeah, for sure.
From the get-go.
Okay.
The ebook also suggests starting with like daily or weekly time frames.
Okay.
That makes system development a little easier. Trying to build a system on a 1-minute chart,
Right.
it's a lot to handle.
Right.
Especially when you're just starting out. Too much noise, too many trades can drive you crazy.
Yeah. Okay, that makes sense. So I'm starting to see how important it is to like lay this groundwork. But let's say I've defined my environment and I'm feeling pretty good about my key idea. Is it time to start coding it up and backtesting?
Well, not so fast. Before you get too carried away,
Okay.
we need to do a sanity check.
A sanity check. Okay, so like making sure I haven't completely lost it, gone down the rabbit hole.
That's never a bad idea.
All right.
But in this case, the sanity check is a quick way to evaluate the potential of your idea.
I see.
We can use a metric called the expectancy score,
Okay.
which looks at both how profitable your trades are and how often they happen.
Okay, so it's not just about how much you win when you're right, but also how often you're actually right.
Exactly.
Okay.
So like imagine you have two systems.
Okay.
One wins 80% of the time, but it only makes a tiny profit each time.
Okay.
The other one only wins 40% of the time, but the wins are much bigger. Which one do you think would be more profitable in the long run?
Hmm, that's a tough one. I mean, they both sound good in different ways. I guess it depends on how big those wins are for that second one.
Right.
Yeah.
So that's where expectancy score comes in.
Okay.
Gives you one number that can help you compare different systems and figure out their long-term potential.
Gotcha.
It's like a quick filter
Okay.
to weed out the ideas that look good on paper but probably won't work in real life.
Okay, I like that. So, my key idea has passed the sanity check. It's not completely crazy. But how do I know if it's actually robust? Like, can it handle some market turbulence?
That's a great question. And that brings us to stress testing,
Okay.
where we're tweaking the inputs like entry and exit conditions.
Uh-huh.
We want to see how sensitive it is to these changes and if it can still perform well even when things are a little different.
Okay, so if I change my entry signal slightly or adjust my stop loss level, does it still hold up?
Right. And we can visualize all this with performance graphs.
Okay.
So for example, let's say we're testing a system with a 20-day moving average. You might want to see how it performs if you switch to a 10-day or a 30-day moving average.
Right. So I can imagine that creating like a bunch of different equity curves,
Yeah.
right?
Yeah, and by comparing those curves, you can get an idea of how robust the system is.
Gotcha.
If they look pretty similar across those different values, that's a good sign.
Okay.
What you don't want to see is what we call a bad graph.
A bad graph. Okay.
Yeah.
So what would that look like?
That would be where the equity curve is really sensitive to these tiny changes.
Oh, okay.
You know, maybe there's one specific value that gives you amazing results,
Yeah.
but you tweak it just a little bit, and then the performance totally tanks.
Oh, I see.
That's a sign that your system might be overfit to the data that you're testing it on.
Gotcha. So like finding that sweet spot where it performs well across a range of values, not just one magical number.
Right.
Okay, that makes sense. And I guess it's all about making sure the system can handle the inevitable ups and downs of the market. It's not enough for it to work perfectly in a backtest.
No.
It needs to be robust enough to survive in the real world.
Exactly.
Okay, that makes sense. But even if my system is super robust, I still can't control what the market does, right? Like, what if we're in a bear market and my system is designed for a bull market?
That's a great point, and that leads us to the next step. Market environment filters.
Okay, market environment filters. That sounds intriguing. What are those all about?
Well, just like the weather impacts what clothes you wear, the overall market environment can also affect your trading success.
Okay.
So a system that works great when the market's trending might struggle in a choppy sideways market.
I see.
We use these filters to adapt to those different market conditions.
Okay, so it's like adjusting our trading strategy to the market's mood.
Yeah, you could say that.
Mm.
They help us fine-tune our entries and exits
Uh-huh.
based on what's happening in the market at the moment.
Okay.
And one simple but really effective filter
Okay.
is the 200-day simple moving average.
Ugh, the classic 200-day moving average. All right, tell me more about how that works as a filter.
So let's say you have a system that only takes long trades.
Okay.
You could add a filter that says only enter those trades when the price is above the 200-day moving average.
Oh, okay.
So then you're only taking those trades when the market's in an overall uptrend.
That sounds pretty intuitive, but does it actually make a difference?
You'd be surprised something so simple can be really effective.
Really?
The ebook actually shows what happens when you add this 200-day moving average filter to the key reversal system we talked about before.
Oh, okay.
And the results are pretty impressive.
Okay, spill the beans. What happened?
Well, with the filter, the system took fewer trades overall,
Okay.
but the average winning trade was much better.
Wow.
So net profit increased significantly, and the drawdown was reduced.
That's huge. I mean,
Yeah.
that's incredible how such a simple filter can make such a big difference.
Yeah, it shows you how important it is to pay attention to the market environment and not be afraid to add some rules. That might reduce your trades, but improve the quality of those trades.
Gotcha. Okay, so now we've got our key idea. We've stress tested it, added a market environment filter. What's next in our system building adventure?
So now it's time to assemble the foundation of our system, what we call the baseline system.
How?
And this is basically our key idea, plus any of those market environment filters that we've picked out.
So it's like the basic framework,
Exactly.
the starting point from which we're going to build and refine.
Right. It's our benchmark for figuring out if any other changes make things better or worse.
Okay.
And this is where things get interesting.
Ooh, I like interesting.
The ebook actually asks, do all trading systems need hard stops?
Oh, hard stops. You mean like those stop-loss orders that automatically get you out of a trade if it moves against you too much?
Exactly. And they're usually seen as a fundamental risk management tool.
Right? Yeah.
But the ebook kind of challenges this common belief.
Really?
It even gives an example of a successful strategy that doesn't use them at all.
Wait, a successful strategy with no hard stops?
Yep. It's called the Ivy portfolio.
Yeah.
It's an ETF strategy, and they use something called a dynamic exit, which is based on market volatility instead of hard stops.
So they don't use hard stops at all. Interesting.
Yeah, it shows you that sometimes those hard stops might actually hurt your performance by taking you out of trades too early.
Oh, so it's not as black and white as always use hard stops or never use hard stops.
Nope. It depends on the system and your own risk tolerance.
Makes sense.
The main takeaway is you got to think carefully about whether hard stops are right for you.
Right.
Sometimes they're super important, but other times they can actually hold you back, like you're not letting the system breathe.
Okay, that's a really interesting point. It's not always about rigidly following some rule, but understanding the nuances and making informed decisions based on your specific system and how you like to trade. So now that we've got this baseline system and we've debated the hard stops, what's the next step? What do we do with this framework?
Well, now it's like we're gathering different building materials for our system.
Okay. I like that.
You know, we're going to be exploring things like entry methods, exit strategies, the different types of rules that we can add
Okay.
to potentially make it even better.
So we're getting into the nitty-gritty of system development now. This is where the real magic happens.
Yeah.
I can't wait to learn more about these building materials and how we can use them to build something truly robust and profitable. But we'll have to save that for next time, so stay tuned for part 2 of our deep dive.
Yeah, looking forward to it. Welcome back. So last time, we were talking about gathering all these building materials for our trading system.
Yeah, I'm ready to roll up my sleeves and start building. What kind of materials are we actually talking about here?
We're going to be exploring all kinds of trading rules like entry methods and exit strategies,
Right.
filters, all sorts of things.
Okay, like a toolbox full of different gadgets and gizmos to test out.
Yeah, exactly. Like a
Yeah.
trading toolbox.
I love that. So do we just start like randomly trying different combinations and seeing what sticks?
Well, not quite. That would be like just throwing a bunch of ingredients together and hoping it magically turns into a gourmet meal.
Okay.
We need a more systematic approach.
Okay.
And that's where independent testing comes in.
Okay, independent testing, what does that mean exactly?
So it means we test each new rule kind of in isolation, starting with that baseline system each time.
Uh-huh.
So instead of trying to test a new entry rule and a new exit rule and a new filter all at once, we test them one by one,
Okay.
always comparing back to our baseline.
Gotcha. So it's like a controlled experiment
Yeah,
where we're isolating one variable at a time to see its effect.
exactly.
Okay.
This helps us avoid something called over-optimization.
Over-optimization.
Yeah.
Okay. Or curve fitting.
Right, curve fitting. Have you heard that term before?
I have, but I don't know if I fully understand it. Can you explain it like I'm 5?
Okay, so imagine you're trying to fit a bunch of data points on a graph with a curve. You could draw like a really complex curve that goes through every single point perfectly, but then when you get new data points, that curve might not fit them at all.
Ah, okay. So it's like creating a system that works perfectly on the historical data.
Yeah.
But then it completely falls apart when you try to trade it live.
Yeah, you got it. It's like tailoring your system to perfectly fit the past, but the market's always changing,
Right, right.
What worked in the past might not work in the future.
Makes sense. So by testing these rules independently, we're making sure that each rule is actually adding value, not just like exploiting random noise in the data.
Exactly, you got it.
Okay, that makes a lot of sense. So what kind of rules might we test during this independent testing phase?
Well, we might start by testing different entry methods.
Okay.
So, for example, instead of entering a trade based on a simple price crossover, we could test entering on a pullback to a moving average, or maybe try entering based on a candlestick pattern.
Ooh, candlestick patterns. Those always seem kind of mystical to me. Do those actually work?
Well, that's the beauty of independent testing. We can put them to the test.
I like that.
And remember, we're not just looking for the absolute best entry method in isolation. We're looking for what works best within our system as a whole.
So it's not about finding like the holy grail of entry signals, but rather finding the ones that complement our existing system.
Exactly. It's about synergy
Synergy, I like that.
between all the pieces of our system.
Okay, that makes sense. So we've tested out some different entry methods. What about exits? What kind of exit rules could we explore?
Well, we can test different types of trailing stops, see if we can capture more profits on those winning trades.
Okay.
Or maybe test a fixed profit target so we exit at a specific level.
Profit targets, that always feels good, but I know it's not always that simple.
Right.
What are some of the trade-offs we need to consider when using them?
Well, a profit target can help you lock in some profits, avoid giving back too much if it reverses.
Right.
But it can also limit your upside potential if it keeps moving in your favor.
Yeah.
It's all about striking that balance.
Yeah.
Between securing profits and letting those winners run.
And I imagine that balance might be different for different systems and different market conditions.
Absolutely.
Yeah.
That's why this independent testing is so crucial.
Okay.
Lets us see how different exit rules perform within our specific system and market environment.
Okay, makes sense. So we've talked about entry and exit rules. What other building materials might we find in our trading toolbox?
We might also look at things like volatility filters or volume filters.
Okay.
Filters that help us avoid trading when the market's super noisy or illiquid.
So it's like adding another layer of protection to our system to make sure we're only trading when conditions are good.
Yeah, exactly. And it's important to remember, not every single rule we test is going to be a game changer.
Right.
Some might help a little, some might actually hurt.
Right.
The goal is to find those rules that consistently add value over time.
Yeah, avoid that shiny object syndrome where we get distracted by something that looks good in isolation but doesn't really fit into our system.
Yeah, exactly.
Okay, I like that. So we've spent all this time testing different rules, gathering our building materials.
Right.
What do we do with all these bricks and mortar? Is it time to start building?
It is. Now it's time to combine those rules and see what works best together.
Okay, this is where it gets really exciting.
Yeah.
It's like taking all the pieces of a puzzle and seeing how they fit.
Exactly.
So how do we go about doing that?
So we start with our baseline system.
Okay.
And then we add one rule at a time, always comparing it to how the system performed before.
Gotcha.
We're looking for combinations that work well together, even if the individual rules on their own are just okay.
So again, it's about synergy.
Synergy, yeah.
Like finding that sweet spot where those pieces fit together and create something even better.
Exactly. And as we're combining these rules, it's important to keep an eye on something called the system's tradability.
Tradability. Okay.
Does that equity curve look smooth? Something you can actually trade? Or is it like super volatile and would be really stressful to trade in real life?
Right. I imagine a system could look amazing on paper.
Right.
But if it's giving me whiplash with all the ups and downs,
yeah,
I'm not going to be able to stick with it.
Exactly. So you want something that's not just profitable,
right,
but something that you can actually trade with confidence and discipline. You don't want to be up at night worrying about every little tick.
Okay. That makes a lot of sense. So we've assembled our system. It's looking good. It's psychologically sound. We're feeling pretty good about ourselves.
All right.
But now it's the moment of truth, right?
Yeah, so now we test it on data it's never seen before.
Okay.
The out-of-sample period.
Oh, the out-of-sample period. Okay. So it's like taking our brand new race car out for a test drive on a track it's never seen before.
I like that analogy. That's perfect.
Yeah.
Yeah, so the goal is to see if it holds up on data. It wasn't specifically designed to trade. If the equity curve keeps going up smoothly, then we might have a winner.
Fingers crossed. So how do we actually do this out-of-sample testing?
Okay, so let's say we use data from like 2010 to 2020 to develop our system.
Okay.
We could then use data from 2021 to 2023 as our out-of-sample period.
Okay.
We just run the system on that new data and see what happens.
So what are we looking for? What would be considered a good result in the out-of-sample period?
Ideally, we want to see that equity curve still trending upwards.
Okay.
Maybe not as steep as it was during development, but still growing consistently.
What about drawdowns? Should we expect to see any drawdowns during that period?
Even the best systems have drawdowns.
Right.
So we shouldn't be surprised if we see some.
Okay.
What matters is whether the system can recover from them and keep making new equity highs.
Okay, so the equity curve's trending up, the system's recovering from the drawdowns. We're feeling pretty good about our creation.
All right.
Can we celebrate yet? Are we ready to go live with real money?
Almost. But before we take that plunge,
okay,
there's one more crucial step: live market testing.
Live market testing.
Mm-hmm.
But we just tested it on out-of-sample data. Isn't that enough?
Well, out-of-sample testing is great.
Okay.
But it's still based on historical data.
Okay.
Live market testing actually simulates trading in those real-time market conditions.
So it's like the final dress rehearsal before opening night. We're making sure everything's running smoothly.
Yeah, exactly.
Okay.
It can help us find any hidden coding errors or maybe some weird market behavior that we didn't catch before. The ebook actually tells this story about a trader who built a system that was supposed to close all trades on Friday afternoon.
Okay.
But because of a coding mistake, the system actually held those trades all weekend.
Oh, no.
Exposing the trader to way more risk
that's scary.
than they planned for.
Yeah, I can see how live market testing could really save you from some major headaches.
Absolutely.
Okay, so we've built our system. We've tested it on historical data, out of sample data.
Right.
We've put it through a live market simulation.
Yeah.
Can we finally celebrate? Are we ready to start trading with real money?
Well, we're getting closer, but there's one critical piece that we haven't talked about yet.
Okay, what's that?
Position sizing.
Position sizing. Isn't that just deciding how many shares or contracts to trade?
It is, but it's a lot more than that.
Okay.
Position sizing is really all about risk management,
Okay.
which is probably the most important part of trading successfully.
All right, I'm sensing this is a big deal.
It is.
So why is position sizing so important?
So let's imagine two traders. They have the exact same trading system.
Okay.
They both win 60% of the time.
Okay.
And the average win is $100.
Okay.
But one trader risks 10% of their account on each trade.
Uh-huh.
The other trader risks only 2%.
Okay.
Which one do you think will be more successful in the long run?
I'm guessing the one who risks only 2%, but why? I mean, they both have the same winning system, right?
That's the power of position sizing.
Okay.
The trader who's risking 10% is much more likely to blow up their account.
Even with a winning system?
Even with a winning system, a couple of bad trades, and they're done.
Wow, that's scary.
Yeah, so the trader who risks less
Yeah.
is much more likely to survive those losing streaks, stay in the game long enough to actually let their winning system work.
So they can weather the storm.
Yeah, exactly.
Yeah.
And that's why the ebook really pushes this idea of risk-based position sizing.
Risk-based position sizing.
It means adjusting your position size based on how big your account is and how much you could potentially lose on each trade.
So instead of just like throwing a dart at a board and deciding how many shares to trade, we're actually calculating it based on our risk tolerance and the specifics of our system.
Exactly.
Okay, so we've built this robust trading system, and we've tested it, and we've got a plan for position sizing.
Right.
Can we finally truly celebrate and start trading live?
Yes. Now we're at that final step, live trading.
Woohoo! This is it, the moment we've been waiting for. Time to unleash our system and watch the profits roll in.
Well, hold on just a second. It's important to approach live trading with some caution and some humility.
Right.
Because even the best systems can have periods where they don't perform as well as we expect, or they might even have some surprise drawdowns.
So it's not just about having a good system, it's about having the mental game to stick with it through those ups and downs.
You got it. Trading is as much about psychology
All right.
as it is about strategy.
Okay, I'm definitely starting to get a sense of the challenges that lie ahead, but I'm also super excited to put all this knowledge into practice. What are some tips for making that transition from simulated trading to actually trading live?
Well, the ebook recommends starting slow.
Okay.
Reduce your risk until you're comfortable with how things are performing. So instead of risking 2% on each trade, maybe you start with 1% or even 0.5%.
Gotcha. So it's like dipping our toes in the water before we do a cannonball.
Yeah, exactly. You gradually increase your exposure
Okay.
as you gain more confidence in the system.
Makes sense. And I imagine it's also important to keep those detailed records of our live trades, just like we did during the development process.
Absolutely. That trading journal is your best friend.
Yeah.
It's where you track your progress, you figure out what needs improvement, and it holds you accountable to your plan.
Okay, cool. So we've covered a lot of ground in this deep dive. We've gone through like the entire process of building a trading system from that initial key idea all the way to trading live.
It's been quite a journey.
It has. I feel like I've learned so much. But before we wrap things up,
Sure.
I'd love to hear your perspective on like, what are the biggest challenges and rewards of this whole system development thing?
Yeah, I think what I find most rewarding is that sense of discovery
Mm-hmm.
and that pursuit of always getting better. Like it's kind of like solving a puzzle.
Okay.
You're always trying new things, you're analyzing data, you're refining your approach.
Yeah.
And when you finally discover something that actually works,
Yeah.
it's such a rewarding feeling.
I can imagine. Like you've cracked the code, unlocked a secret of the market.
Exactly.
But I'm sure it's not always easy. What are some of the challenges you faced along the way?
I think one of the hardest parts is dealing with the emotional roller coaster of trading.
Right.
It's easy to get caught up in the excitement of winning trades
Right.
and then get frustrated when you have some losses.
Yeah.
But to be successful, you need to be able to stay objective.
Okay.
Focus on those long-term goals.
Stay disciplined and not let those emotions cloud your judgment.
Exactly,
Yeah.
which is often easier said than done.
Right, exactly.
But I think that's part of what makes trading so challenging and rewarding.
Yeah.
It's testing your skills, your knowledge, your mental toughness.
It's a constant test.
Yeah.
Yeah.
And that's why it's so important to have a clear plan,
Yeah.
a well-defined system,
Uh-huh.
and a really solid risk management strategy.
Right.
Those are the tools that'll help you through the ups and downs and hopefully come out on top.
All right. Well said. I think that's a great point to end on.
Okay.
We've covered so much in this deep dive.
Yeah, we have.
And I hope everyone listening feels like they can go out there and start building their own systems.
Absolutely.
Maybe you have an observation about the market you've been wanting to explore, or you're just excited to put all these system development principles into practice.
It's definitely possible.
Yeah.
The markets are full of opportunities for those who are willing to put in the effort and think outside the box.
Absolutely. So keep learning, keep exploring, never stop seeking that edge. We'll see you next time on The Deep Dive.
See you next time.
Man, that was a wild ride. We've walked through, every single step of building a trading system.
Yeah, it's quite a process.
From that initial key idea, that brainstorm,
Yeah.
all the way to actually putting it into action in the market,
Yeah.
live trading.
A lot goes into it.
It's not for the faint of heart, but that's what makes it so exciting. So before we wrap up this deep dive, let's recap some key takeaways for our listeners. What are the big things you really want them to remember from this episode?
Well, first off, I can't emphasize enough how important a systematic approach is to building these systems. It's not about relying on gut feelings
Right.
or chasing the latest hot tip,
Yeah. It's about having that structured process.
Yeah.
Like the ELM, Strategy Development Protocol, to guide us.
Right. And that process starts with taking good notes.
Okay.
Those system development notes are going to be like your treasure map,
I like that.
guiding you through this whole complex world of system development and helping you avoid those costly mistakes.
Yeah. It's like having a detailed record of all your thoughts and experiments and discoveries.
Yeah.
You can look back and see, okay, this worked, this didn't work, and why.
Right. And it's not just about documenting the successes.
Okay.
It's also about learning from the things that didn't quite work out.
Yeah, those failures are often the best learning experiences for sure.
Absolutely.
Okay, so we have that systematic process.
We're diligently taking notes.
Yep.
What's next?
We need a good key idea to start with.
Okay.
That's the foundation. It all comes from that initial observation about the market where you think, this could be an edge.
That spark of inspiration.
Yeah, and once we have that,
Uh,
it's all about testing its robustness.
Right. Making sure it can handle those different market environments, not just a result of over-optimizing or curve fitting.
Exactly. Stress testing and those market environment filters are key.
It's like building a house on a strong foundation. We got to make sure our trading system can weather this storm.
Exactly. And speaking of building a house, remember that independent testing?
Yeah.
Evaluating each rule in isolation, that's important to make sure each piece is actually adding value.
Right. So it's not just exploiting random noise in the data.
Yep.
Carefully selecting those bricks, making sure they fit into our overall design.
Exactly. And once we've put it all together,
We got to test it on data it hasn't seen before, that out-of-sample period, to see if it really holds up.
the real test, right? Taking it out on a new track?
Exactly. And even if it passes that test with flying colors, we can't forget about position sizing.
Right, managing that risk.
Yep, protecting our capital, even with a winning system.
It's about taking a calculated and disciplined approach to trading, not letting those emotions take over.
Couldn't have said it better myself.
And of course, we have to be mentally prepared for live trading.
Absolutely.
It's going to be a roller coaster.
Even with a well-tested system, there will be ups and downs.
Right.
Successful trading, it takes more than a good system. It takes mental resilience.
It's a marathon, not a sprint, right?
That's right.
So what does all this mean for you, our listener? What's next? What are you going to do with all this knowledge we've shared?
Well, hopefully you're feeling inspired to start building your own systems.
Yeah.
Maybe there's an observation you've been sitting on, or you're ready to put these principles into action. The markets are full of opportunities
Absolutely.
for those willing to put in the work and think a little differently.
And for those looking for more guidance, the ebook we talked about, Building Profitable Trading Systems by EasyLanguage Mastery, that's a great place to start. They even have a video course.
Oh, yeah, this System Development Masterclass
Yeah.
goes into even more detail.
Awesome. So keep learning, keep exploring, never stop looking for that edge.
Absolutely.
That's it for this deep dive. Thanks for joining us.
Thanks, everyone.